Thank you. All right, folks, I was reading a piece in FT last night, and it's interesting because it talked about the U.S. being overstimulated, and I said to myself, bam, he did it again. I want to bring in Bianco Research President Jim Bianco. All right, Jim, so here's a line that made me think about you, right? At the end, they say first economists dialed those forecasts back to soft landing, and now they're all talking about no landing. I said, golly, Jim was talking about no landing with no one. I mean, you were the only person on a no landing island, and now it's getting crowded. Is it time to move to a different landing?
We might be getting there because no landing island, which basically means the economy grows at potential, if not more, also comes with stickier inflation island, too, that you're not going to get inflation to do what economists call that last mile and go to 2%. And so that stickier inflation is kind of the yin of the yang of the economy is doing well. And yeah, everybody seems to be moving in that direction. I don't think we're all the way there yet, that you would almost say from a contrarian standpoint
right,
that it's time to go the other way. But to put it in a baseball metaphor, we're probably in the seventh inning. So the game is getting kind of long in the tooth here, but it's not quite over.
So Bank of America has this survey of credit investors, and what caught my eye was you had a greater percentage that's saying that they could expect the inflation surprise to the upside versus those that said an inflation surprise to the downside. For a long time, all of this was supposed to be, temporary. Housing was going to be a lagging thing, and rents would be lagging, and we're way off script. So again, it feels like most strategists have had it wrong. Consequently, everyone's going back to the drawing board.
Yeah, they have, and I'm not surprised by that survey result and similar ones like it, because what the inflation numbers have done for the last 3 or 4 months is constantly beat on the upside, is constantly surprised. Now, they're not surprising with, eye-popping numbers, but they are trending higher, and they are holding, at least on CPI, in that 3%, 3.5% range, which is way above the Fed's target. And I'm not surprised that everybody's starting to move that way, because that's what's been happening. Like I said before, probably in the seventh inning of this move right now.
Right.
We're not quite there yet, but we're getting there.
All right, so Wall Street somewhat disappointed a little bit about these rate cuts. I think that played a role in some of the recent weakness. But I'm reading about a black swan hedge fund manager says that Fed rate cuts could signal a market crash. And listen, he's a black swan manager, so yeah, he's talking his book. But there's also this. There have been pivots in time that were associated with market crashes, beginning with the great financial crisis. And some of these swoons are just absolutely mind-boggling. 50% for the great financial crisis, 38% for dot-com, 17% for the double-dip recession. So on average, a decline of 28%. So how does the Fed eventually cut in a way that doesn't jar the market or the economy?
Oh, that's a good question, because that's been, as your table shows, that's been the history. At this point, we've gone almost a year without a cut. So when does the Fed cut? And to put it bluntly, it's when they panic that the economy is going over the side and they're trying to stop it by stimulating it, and they usually can't. And we have a recession, and the stock market responds negatively to it. And that's the challenge that they've got to face right now. Or maybe that's what we've got to start to think about is whenever that cut comes, is it coming because the Fed sees real weakness and real problems in the economy, as opposed to what we were talking about a few months ago was the Fed declaring victory, getting on the back of the convertible and waving to the crowd saying, we did it, we got rid of inflation. It might be the other side around. I'd want to use an expletive to say, oh, here we go with the downturn in the economy.
Yeah.
But that's been their history.
There will be quite a few expletives for sure. Jim, thank you so much, my friend. Appreciate it. Great stuff. All right, folks. Unbreakable Investor 20.